Dennis Tubbergen here with a market update. Today's April 4, 2018. I want to give you some more information kind of on the heels of the economic update that I recorded today, having to do with China launching a yuan denominated crude oil futures contract. So basically now any country selling oil to China has the option now to take renminbi instead of U.S. dollars for the trade. An advantage and a reason they may want to do that is that they can then immediately take the proceeds in yuan and buy a gold-backed yuan contract, which is 100% collateralized by gold. So essentially, it's getting gold for the sale of the oil. Well, this contract started with a bang, as you can see from the chart here. The volume on the chart is huge. My screen didn't pop up, but you can see it here. Big volume to get started. Comparing it to the Brent crude oil futures volume, it seems like, at least initially, that this whole idea is being embraced. China, of course, would love nothing better than to break the dollar's dominance. That's brought up in the article here. According to the proposed plan, Beijing would start with purchases from Russia and Angola, two nations which, like China, are keen to break the dollar's global dominance. They are also two of the top suppliers of crude oil to China, along with Saudi Arabia. Now, what's interesting is China is now, as I brought up in my update earlier, and my screen is still not blowing up here, but hopefully you can see this on the screen. China has now surpassed the United States as the largest importer of oil in the world. So the timing of this contract is very good. Now, if I go back and take a look at the US dollar chart, if you've been watching and listening to these market updates for a period of time, I have been talking about this megaphone pattern that has really appeared in the US dollar since early 2015. So this megaphone pattern is about 3 years in the making. And you can see that I've drawn a line on the top edge of the formation here and the bottom edge, and those two lines together look like a megaphone. Megaphone patterns are typically either reversal patterns or continuation patterns, and the longer the megaphone pattern lasts, typically the bigger the subsequent move is. Now what's interesting here is prices have broken out of the bottom of this megaphone pattern, which is not good news for the US dollar. Prices haven't plummeted yet, but they've certainly broken out to the downside. And we've talked about the importance of analyzing charts in the right time frame. And if I go back and just look at the US dollar index from the beginning of 2017 and follow it through to the present, you can see the US dollar is in a significant downtrend. In fact, if I were to draw another trend line here, you can see that basically we have a downward price trend channel. If I were to draw it about there, that would be just about parallel. So the dollar is sliding. Technically speaking, that's easy to see from the chart. Fundamentally speaking, when you take a look at what China and the rest of the world are doing to develop alternatives to the US dollar, it all fits together. So the message really is make sure you diversify. Make sure you don't have all your assets held in US dollars. That's the lesson from today's market update. My name is Dennis Tubbergen. It is April 4.